you get when you add one dad, one mom and two kids. One family plan. Get medical insurance for your whole family online in just 10 minutes, as low as 150 ringgit per month, only with AXA eMedic Family Plan.
Thank you everyone for joining us. What a lively crowd, quite a number of you guys. So I'm Vincent. I'm the editor of FinTech News Malaysia, for those of you who don't know me. And I have with me today Rohit, who is the CEO of AXA AFFIN Life Insurance. I mean, Rohit, I've known him for a while, and pretty cool dude. Very rarely you hear partners and vendors unilaterally say good things about an insurance CEO. So that must be a good sign. And, those of us who have spoken to Rohit about innovation, you always hear him say, if you want to innovate, you must not be afraid of being fired. So I think before we begin, when we talk about COVID-19 and the impact on business and the impact on insurance sector, a lot of times we forget to acknowledge that this, first and foremost, is a human tragedy. Around the world, nearly 4 million people are already infected as of today. And earlier this week, when we lifted restrictions for the MCO, it kind of broke my heart to see all those people who were lining up at the pawn shops. And it kind of blew my mind to also look at data coming out from the United States, where there were 30 million over people who filed for jobless claims. That's pretty much the population of Malaysia. So I think in light of that, I kind of wanted to understand, what is AXA as a company doing to help the Malaysian society to combat this crisis?
So I think first things first, before AXA, what AXA is doing, I think it is a global crisis, a crisis that I think, I don't think many people have faced in their lifetime. There aren't many who've lived through the Spanish, influenza in 1918. I heard one person who's lived through both in Spain, but not many, right? So in insurance parlance, we call it a once in a 100-year event or once in a 200-year event. These are events from a risk management perspective we do prepare for. But, how much ever you prepare, when it hits you is when you really realize the sheer the sheer magnitude of the whole situation. So we need to be heads and heart on the ground, got to listen to people, understand the challenges that people are facing. We need to be very safe still. I think because the debate across all countries is one between economy versus health. For example, the country I come from, India, we have 1.2 billion people. We have almost 200 million people who struggle for their daily meal, right? If they don't work for a daily meal. And the question is, if you open the economy up, these people would have jobs, but probably you're gonna put 2% of India at risk, which is the marginal, people with health conditions above a certain age, etc. If you don't open it up, you're putting another big population at risk for sheer hunger purposes. So every country from Malaysia to the US to UK is weighing in these options. It's really not easy to be a policy maker at this point in time, if you ask me.
No, I don't envy that position at all.
No, not at all. Yeah. I know many of them in the past have been fighting for it. I'm not sure many are going to be fighting for it right now, but yeah.
But it is a precarious balance, as you said.
Yes. So on AXA, Vincent, I think we've been doing a few things at the group level, but also at the entity level. At AXA in Paris, we've been using our research fund. We have an AXA research fund, which is quite well funded by AXA. We are looking at that one to really see how can we help, foster greater research in this area, especially in the open source area. So it's something we are doing quite, strategically. At the AXA group level, we also have a solidarity fund where we actually, based on social media responses, we're actually directly donating to ICUs across 60 countries. Malaysia has several hospitals as well that we are donating. Locally, we have, both our general insurance and life insurance business doing different things. The general insurance business has already donated to a few, places. And we are running a campaign called Smash the Curve. And we hope many of you would donate as well. So we're using it to do a crowdfunding from our customers, agents, as well as employees, and then to provide essential PPE to the frontliners. I'm very happy to say that, I think last when I checked, we almost had 25,000 collection just from our employees. So, so it's clearly something we are trying to do as a company, and the company will also contribute to it. Now, for the customers, there are 4 or 5 elements we are looking at. The first one is we have an assistance program for customers. So it's not just those who have COVID, right? There are also people who are affected by COVID. So we actually have a program working with Naluri, which is a health tech firm, as you're all aware of, where we actually provide assistance to mental health assistance to customers who feel strained at this point in time. We also launched.
For those who may not be 100% familiar with Naluri, maybe you could share with them a little bit what Naluri is.
So Naluri is a health tech firm started by Azran Rana and a few other very able entrepreneurs. Basically, they provide you rehabilitative care as well as mental health support through an app. So it could be as simple as you want to lose 5 kilos. It could be as simple as you want to run your first 5 kilometer. You want to watch your diet, or something more detailed in terms of managing when you've had a disease or you have a depression, stress, etc. So it's something we are giving our customers for free for 2 weeks. The first 1,000 customers get it free for 4 weeks. And the others could buy it at a discounted rate if they want it longer. We also have a assistance program that we have launched for our customers, where we actually provide them some financial assistance in case they are hit by COVID or their family needs some support. That is effective till June, but the campaign was over in March. So we've been constantly, bringing in new things. As an industry, I think we've done 2 or 3 things which are common across all companies. The first one we said was COVID will be covered by us. So that clarity was provided. The second one, as you know, we've come up with a premium deferral program. So customers who have been really impacted, subject to the conditions, could apply for a 3-month premium deferral program. We also have set up an 8 million testing fund working with Life Insurance Association, which provided 5 million, General Insurance 2 million, and Takaful 1 million. And this 8 million is for those who really need to do the testing. It is being provided. It's on a reimbursement basis, and of course, it's subject to the fund being available. So if the fund is over, it's over. So there's a process that we've established, and the customers can apply for it.
That's wonderful. So to kind of sum it up, the few things that you're doing, number one, is the Smash the Curve campaign in which people can donate. Number 2, you spoke about Naluri, in which you provide your customers access to Naluri services to help them to cope with this mental health and various other health aspects of it. And then you have the deferment of the premiums, and also the 8 million that's allocated for testing. So that's quite a few.
Also, there's one more initiative which was there before COVID, and I think post-COVID, it's probably becoming more important to people. We actually have 2 other tie-ups with 2 other health tech firms. One is with Dr. On Call, who we work quite closely with. We provide free drug delivery as well as teleconsultation to our customers.
That's important now.
So it's very important right now, right? So we've actually seen an increase in that usage as well. And then the second one is with someone who we work very closely with, BookDoc. We use it as a reward platform and also an information sharing platform on COVID. And BookDoc, we've noticed that customers are becoming, actually, on the contrary, there are many who are quite active during the MCO because they've suddenly realized, health is quite important to them as well. And don't be surprised. There are actually, I would say, roughly 30 to 40% of customers who are actually more active than before, just because, they realize that they have this time and probably it's a good time to invest on health. Yes, there are some who have fallen off as well. And that's where I think all these platforms will come together.
I think we're seeing these trends across financial services, right? In insurance, and I'm even seeing that in the capital market space where I'm hearing from players, they're saying we're seeing more users registration than we have ever before. Now, before we move on to the next question, I just kind of wanted to highlight to the audience who's with us today. We kind of try to keep this casual, so feel free to ask any questions at any time. We'll try to address it as best we can. So otherwise, I'm just going to hog the conversation and you guys don't want that. So feel free to throw any questions. So we will try to address them. So I guess my next question for you, Rohit, is that obviously the pandemic has changed our lives quite significantly, from the way we work, from the way we live. From the data that you gather from AXA AFFIN Life, what kind of shifts in behavior have you seen? What kind of data are you able to share with us?
Sure. So I think for me, there's one research that I would like to share, right? I was attending a MII, which is the Malaysian Insurance Institute, one of their, sharing programs just like this, a webinar. And Kantar was there and they shared some of the recent, trends they have seen. And one of the trends was very interesting for me. They said that insurance was one of two industries where customers are looking to increase the value. And 30% of customers actually want to increase their investment in insurance. Could be by way of new products or could be by way of increasing coverage. We've seen it across the world, be it SARS, during SARS, or be it during the floods in Thailand in the past. Always these events increase awareness among customers. It's unfortunate, but this is when customers realize, oh, I'm not covered, somebody else is covered, or somebody else has been affected, and they realize, because insurance is a trigger-based sale still, except for the mandatory products. So what have we seen? We have seen some amazing trends, and that's what gives me the reinforces my conviction, which we started 2.5 years back, to be the preferred, health insurer for millennials in Malaysia. Is we are seeing digital really being embraced. Let me give you a few statistics. Our digital business has tripled last year, and this year we're expecting to double over the triple. And in March, we had a very impressive growth rate, upwards of 50-60% on a business that's already tripled. So we're seeing the trends flow through. And our agency business, I can see it really embracing digital, and we can talk about it later maybe. I can see really how agents are embracing this concept of digital as not being actually a threat to them, but actually being complementary to them. On the traditional customer base, we've also seen customer portal, which we have a customer portal where customer can do a lot of the transactions on their own. I can tell you it was almost like a cold storage for some time. Customers didn't use it because, they could just pick a phone and tell the agent, can you go and submit this for me? Or do that. Now, suddenly they don't have that option. So we've seen in March, 61% increase in our customer portal usage just in 2 weeks of MCO. So you can imagine what April figures would be when it comes to. So, and customers are using it for very interesting things. They're using it to ensure their premiums are not missed. So they're actually giving us credit card details saying, hey, let me not do this thing of coming and paying cash, or even though we were saying don't do it. They were actually, registering their credit cards more. They were updating their details more, so that they now want to engage with the insurer more. And the agents love it because you know what? For the agents, it's better because they can focus on their core value proposition, which is selling and servicing the customer on complex transactions and not simple stuff like just updating the address of a customer.
Like
so
administrative
clearly,
stuff, right?
yeah, exactly, quite administrative stuff. So it's really an interesting trend. And another thing we've seen is people, I think, are becoming more and more aware of the family coverage. We launched a family plan in September 2019, and the very popular eMedic was April 2018, and that was the one that was leading the market, and we have 49% market share overall in digital. But what happened when family launched, and especially now with the MCO, is family plan is now half of the total sale.
Oh.
Yeah, in 6 months. So clearly more families are buying full coverage for their whole family online. But again,
it kind of makes sense.
Past,
right?
Yeah, it makes sense. Exactly. Makes sense. So in the past, many people didn't want to put family online because they said it gets complex. But I think that's where we put a lot of effort in simplifying it. Even our family plan, you can buy it in less than 10 minutes. And we don't have more than 3 to 4 underwriting questions. I see too many online products out there where there are 20 questions, 10 questions with so many permutations and combinations. I can tell you, I will never buy that online. Because, an online customer has no patience to fill up 10 questions and 15 questions and 20 questions.
It's true.
I know why insurers do it.
On mobile,
Exactly. And I know why insurers do it. But that's the bane of this industry, right? They're so traditional minded. We think giving 100 features to the customer is what the customer wants. Actually, there are only 3 or 4 features in most products which a customer really wants. Everything else is exception handling.
Yeah, true. I wonder how hard of a fight did you have with your risk guys to simplify it to that few questions. I'm sure it was a tough conversation with your risk team.
I think it goes down to the same point, right? If you have the conviction and if you take them to the place and show them what it means, and I think the risk guys will get it. I was telling a story, I think, in my team. It's both ways, right? I remember 2 years back, it was just 6 months into my job as a CEO. And there was this long discussion about what if Malaysian equity market is down 10%? What if the bond yields are down 100 bips? And what if there's a pandemic? And I was, hitting my head on the hand saying, guys, this is so theoretical and extreme situation handling. Hey, you know what happened 2 years later? The pandemic happened, the equity market fell more than 10%, and the corporate bond spread fell by 90 bips. So, now no one is laughing. But at that time, we went through the process. But I think that's why these two functions are there. Just like how they need to understand business, we need to understand where they come from. And vice versa. With this process, what we did was we actually put everybody in a room, and led by our chief technical officer, who's the innovation guy in our office. And we said, guys, you solve the problem out. And the best thing about putting a technical guy to innovate is he knows all the bells and whistles. He just needs to have it in the mind, which in this case, I'm really lucky to have someone who has it, and the rest will come through. But I can tell you, it's not for the brave heart. It's not for the faint-hearted. Yeah, it's the most emotional, friction-full, eventful weekend that you can have, because everybody has a view, counter view, so on and so forth. So you need to balance the two elements for sure.
But it keeps things exciting. Otherwise, work can be quite boring. I would want to go back on the whole agency model a little bit later, because I think this shift does put that into question in terms of how that would operate from now on. But we do have a few questions from the audience, so let's jump into that first. So from Clarence, his question is actually relating to cashless transactions, and with more people who are having some aversion to cash. His question is whether or not more insurers will shift out from cash payments. And also in line with that, there's also a question from Lady William Shaw, who is also looking at, how do we address premium payments for those who are maybe underbanked or do not really use banking facilities. So there's 2 dimensions to that question. Feel free to take that.
So I think on the cash question, we don't like cash either. I think the regulator doesn't either. And I can tell you as an organization, we don't like it. But with any change, there are 2 ways of driving change. One is you take them to the lake and you show them the water and they drink it or not. The second is you push them into the water. Okay. Sorry to say this, but that's the approach. What we did, for example, is always been the first one, where we actually show them the benefits of doing things in a certain way. When we launched for agents e-submission, which meant agents can just submit over their iPad the applications, and they don't need to submit their hard copy forms. I can tell you, it took some time to convince everybody. But over a period of time, we had 86% of our people submit submissions digitally. And then we said, we are going to put in a cost for proposal forms. You cannot charge the customer, obviously. Agent has to pay 10 ringgit for every proposal form they buy. And you know what happened? 14% of agents still bought these application forms, paying 10 ringgit.
Right. Okay.
Now that COVID happened, I call COVID the second scenario of being pushed into water. So the first was my scenario. The second was COVID happened. You know what happened to these 14% guys? They're all submitting now digitally because they realize otherwise they have no business. So, you know, that's life. Sometimes you learn forcibly. Sometimes you learn through the right means. To the point on cash, I think it'll take time because in some of the smaller cities, it's still a culture to come and give cash at the branches. So it will take time to bring about that change. But I think that's where we are working closely with telcos, e-wallets, and other insurtech partners who I can talk about, who really can help solve this pain point. In fact, in the middle of May, we have a pretty exciting product proposition going live with a leading telco here. And the payment will all be done by them. So
Really?
clearly, yes. So it's clearly one area we are working on to avoid the cash proposition. And the point of, digitalizing this process, I think it depends on customer experience. It's very different between a mass affluent, people like you and me living in cosmopolitan cities, extremely digital. It's very different to someone who's probably living in Cebu, different kind of mindset, different kind of transaction. We need to deal with each of them differently. And that's where I think our intermediaries have a lot of insights, which we are missing out sometimes because they know how their consumers behave. So it's important for us to influence them to influence the consumer.
True. And also to the point of the lady that brought up that, how do we address those who do not have access to banking facilities? I suppose, Malaysia is one of those a little bit more well-developed financial markets where our population is pretty much banked compared to some of the Southeast Asian countries. But beyond that, I believe a large portion of the unbanked is actually the migrant population. And I understand that you guys have done something in that space with merchant trade, right? Is that something you want to talk about?
So on the general insurance side, we've done something with merchant trade, where actually you can buy PA coverage through merchant trade, and it can cover payment abroad as well. So it was something that was worked with Bank Negara. For me, we have been quite aggressive in this space. We call it the emerging customer space, customers who will eventually emerge to be one of those four segments. We call it affluent, mass customer group. For these customers, we have to be extremely pragmatic. We have to know where are they putting their cash in. One, as you said rightly, is remittance company. The other is they are using e-wallets. Don't be surprised. The other is they are using things like ride-hailing platforms. The other is they are definitely using telcos. And that's where the real power is, where if we can tie up with these people, and that's why I'm a firm believer in partnership. At AXA AFFIN Life, we have about 23 partners and we are growing every month. I keep forgetting how many partners Janet adds every month now. And most of these partners, there are two ways of working. One is the partner has a captive customer base and wants us to promote something to them, in which case it's a pure promotion model. There's a second model where the partner is saying, hey, listen, I have a customer base, but I also want the customer base to remain within my infrastructure, and I don't want them to move on to your side, which is fine to me because it is their customer. So if there is a telco, or if there's an e-wallet, or if there is a player who's coming in with that requirement, I'm happy to work within the environment. That's where APIs, we're quite aggressive on APIs. We're constantly innovating as well. So that's where this play comes in, because then we can tie up with them and say, no problem, let them do it within their environment. I'm a firm believer that the future of insurance, there's no one method to it. There are two types of way insurance will go. One is there will be complex financial solutions which will be sold through agency, bank assurance, etc. There's also going to be simpler financial products which are going to be sold by the people who have access to the customer the way they prefer it to be sold. And they will take care of the billing. They will what we call bite-sized insurance. It will be small premium, small coverage, so the customer doesn't feel the pain, and that will help a great deal on the penetration side of it. And in the future, I won't be surprised if insurance is like a utility bill. What do I mean by that? Okay. In the past, insurance was always an amount you had to pay before. Tell me one industry in your life where you pay for a service which you may or may not get, because in the case of debt, we don't get it, after 20 or 30 years. Okay, so you keep paying every day. So when you buy a mobile phone, when I bought this glass, or when I bought the specs, I know what it feels like immediately. But here I'm paying for a service for which I may or may not get in 20, 30 years. What if I change that and I say, hey, you know what? I can actually charge you on a usage basis. So when we launched telematics on the general insurance side, basically your premium is also a function of how well you drive, how far you drive, and how long you drive.
It's kind of a UBI model then, yeah.
Yes, but in this case, of course, it's prepayment, but I'm saying there could be a future where it could be purely postpaid. There could also be a health insurance which is postpaid, because if you give me your wearable data, if you give me, of course, subject to data privacy and your own conviction, if you're ready to do it, then I can collect your data and tell your health premium. If you give me your GPS data with the help of your telco, then I can charge you your travel insurance premium, because I know how many times you went to Bangkok or how many times you went to Korea. You don't need to pay me before, you can pay me post. So I do believe insurance as an industry will kind of split into two parts, what I call bite-sized insurance and more material insurance. The bite-sized insurance, which is lower involvement products, I do believe the time has come for it to be more digitalized. The more complex financial solutions, I think advice will be even more relevant than ever before, especially after COVID. People realize, oh, I'm not covered for that, I'm not covered for this, and so on and so forth.
I think that's an interesting point. And, even if we look at some of the most advanced insurance markets in the world, China, for example, where, you are able to purchase insurance through your Alipay and whatnot. Last year, we saw digital channels grow by 20 times, right? But still the dominant channel is physical. So there's obviously a need for kind of both approaches, like you said. More complex ones, you can have some advice, and the more simple ones, you can go through digital channels. But that also segues nicely into some of the questions that we're getting from the audience. There are those who aren't necessarily comfortable with a digital approach yet. There's some who's commenting, like, there's people who still prefer agents to explain the policy detail in person. The question is, how do you push forward the digital transformation in light of that? And I guess my add-on to the question is that, are people preferring the physical channel because the digital channels are not designed well enough, right? Because as an alternative, it's not good enough of an alternative. So the question is there a way that we can design our digital channels to kind of meet these objectives is what I'm looking at.
So it's something that, I'm most excited about, talking about agency 2.0, as people call it, right? I call it agency 2.0. There's a reason for this one, right? Do I believe agents will not exist? Not at all. You can look at countries like US, you can look at countries like UK. Advisory channels still remains the biggest contributor to life insurance sales or commercial insurance sales. However, simpler products which are highly commoditized in nature like motor, travel, home, simple protection, has gone fully online. You can see most of these countries, it's primarily sold through online or integrated online channels, which could be teleassist or telephone. And there's a little bit of sales through advisory channel, more because of relationship where you're giving your large life insurance, you might as well give your motor with them. That's all. For me, if agents are going to depend on these commoditized sales for their future, their days are numbered. If agents are going to focus on proper advice-based complex financial solutions for their future, I think the future is very bright. It's brighter than before. I'll tell you why. My view, they're going to be lesser agents than before, because they're going to be lesser full-timers than before, because in the past, you could be a part-timer and be an agent. Now it's becoming very difficult to be an agent and a part-timer because the regulatory requirements, the company requirements are all becoming more demanding, because we want proper professionals running this business. It's financial advice. So what will happen is the same guy who was probably meeting 4 customers in a day will have to meet 20 customers in a day. Now, is it physically possible for him to meet 20 customers in a day? Impossible. With Malaysian traffic, you know the Kuala Lumpur traffic, you know the parking challenges. Exactly. So what's going to happen is probably 16 or 18 of those 20 customers, he's going to handle over video, over telephone, over WhatsApp, and so on and so forth. And the remaining 2 or 3, where there's really a requirement for physical meeting, he will go and meet them. The age-old concept that relationship selling is only when you meet physically is being questioned at its very foundation. Because let me tell you, how many times have I met you, Vincent? But you and I share a lot of notes from time to time. And we share a business relationship. Now, that's evolved over a period of time because digitally we are in touch. So there's a whole host of customers for whom physical meeting doesn't define relationship. Trust is not physical meeting. Relationship is not physical meeting. But there will be a sect of customer who wants to meet physically. And the third point, which I think is what someone asked about customers wanting to understand features. Where a customer wants to understand features, it's our responsibility to explain it to them. But there are 2 ways of doing it. One is by simplifying the product. Think mobile first. When you think mobile first, already 99.999% of our products cannot be sold. You know why? They are so complex that sometimes I struggle when I sign off a product to understand what it covers. And I have to call the product team guys and say, can you explain this to me? What does this mean? And I've been in insurance for 17 years. So the thing is, the minute we think mobile first, the products are going to get simpler. But there's going to be products which are complex, which will require financial advice. And that's where our agents come in. So that's why it's very important to develop them technically, professionally, financially, etc., so that they can take care of those financial advice, but using digital tools as against the older ways of doing things. Because then the sale becomes more efficient. There's more power in the hands of the customer, and the customer has choice of how they want to create something rather than just being sold something. They're buying something which is relevant to them. So it's need-based selling in the real sense of the word. And the last point on this one is what we noticed in AFFIN Life. Most people, when I started off, we told the agents, we will sell digitally. And I call the top 6 leaders of my organization, one of whom contributes 20% of my sales, okay, my biggest leader. And I told them that I will sell digitally. But my message was very simple. Hey, you know what? There's a group of customer who wants a 50 ringgit product online, buying in less than 5 to 10 minutes. Are you ready to sell it? They're like, no, 10 ringgit commission, what am I going to do out of it? Exactly. Yeah, so they're not even going to pay back their time cost. So my point was precisely, so let me acquire them. And as they get richer, older, and require more complex financial advice, you will have an opportunity to tap them. So rightfully so, there was a little bit of question mark, but they believed in me, thanks to them. And what happened a year later, in the first year, 27% of the sales of my first year agents came from the leads I gave them. Because eMedic became such a hit that many people came online and said, hey, actually, I want eMedic, but I also want for this, and this. And we said, guys, that's complex advice. We don't want to sell you something wrong online. So you need to speak to our agent. And suddenly, boom, while as I said, digital sale grew 3 times last year, at the same time, 27% of my sales of new agents in 2018 and 20% in 2019 came from the leads we gave them. So you know what happens now? A leader meets me in the corridor and asks me, boss, when are you launching your next digital product? And I'm like, huh? Agent asking for a digital product. So I said, what happened? He said, no, it will open.
Yeah.
Exactly. And he said, no, it will open up new opportunities. I think the mistake we've done as an industry is to tell agents that digital is a threat to them. We haven't told them digital is your existential question. If you look at it complementary in nature, it will save you and also help you grow.
Sorry, Rohit, your line is breaking up a little bit.
Also looking at having a digital proposition where they can also sell online.
Your
and
line
then they will sell the more complex products through advice.
So your line was not clear earlier, so maybe you want to repeat that last part, just in case.
I think I lost Vincent.
Rohit?
Yeah, okay. Yeah,
Sorry,
I got you, Vincent.
Yeah, I don't know if it was your video or my video, but for a bit, can't really hear what you say. But just for posterity, maybe you can repeat that last sentence in case people.
Okay, the last sentence is actually we are now promoting agents to have a strong digital presence, both in terms of websites, to other ways.
Okay, I think we lost you a bit there again, but what I gather is that you're pushing for your agents to go digital as well. Yeah, okay, cool. Sorry, I guess this happens with live streams, right? Sometimes these things happen. And that's a pretty interesting point. So in a way, your AXA eMedic is like a gateway insurance for people to purchase more insurance, acting as kind of a funnel. But is there a scenario in the medium to long term where you see consumers becoming more and more comfortable with digital to the extent where they can also purchase more complex products online? And if that happens, how then should agencies shift their business models to meet these changing expectations and behaviors?
So my own view, we can never say what will happen in the future, right? My own house view at this point in time is agents will remain relevant for very complex financial products because you still need that someone to explain to you when you're putting in big money, whether you're putting it in the right place, whether it makes sense economically, from a portfolio management perspective. You need that expert to advise you. But there will be a time when, as I said, 80 to 90% of the sales of an agent, he or she will do it digitally. What I mean by that is, even today, we are seeing 45% just during the COVID 1 month, 45% of our submissions are by agents are through video calls and telephones now, because we will know because the submission is going to be different. So we still wonder how the 55% of them met their customers. But nonetheless, the fact is half of them have submitted without meeting their customer. So the times are really changing. So, and I think this will increase, this will dial up. There would be 70, 80% of the sales, which means agents will become more Remember, when I give you advice over a video call, it is being digitally assisted because I could have functions in my digital transaction where I can show you what your portfolio looks like. I can present to you the different scenarios and sell to you right now. But that doesn't mean it's not a physical meeting. It's just that it's not a physical meeting, but I'm selling it digitally. I'm providing you advice. We're building a relationship, a trust factor, but it's just being administered differently. And the benefit of this is I sold to Vincent. My next call at 12 o'clock, I'm going to sell to someone else. I don't need to pick up the car, go through the traffic jams, park the car, go up the building, which means I'm already lost meetings. So in fact, I'm now telling my agents, guys, gone are the days when you said you should have 6 meetings a day. You should have 12 meetings a day. 12 into 30 minutes is only 6 hours. In fact, Sanjay Tolani, who is one of the most respected faces in this industry on agency business. He was mentioning that he never takes more than 20 minutes to do a sale. By that logic, 12 meetings into 20 minutes is not a lot of time in a day for them to spend. So it's really going to change the way people do business, in my view.
Yeah. And you'll be able to do that all in shots, right? So that's a nice little bonus, isn't it?
Exactly.
So, Catherine, one of the audience has also brought up a good point. The underinsured and uninsured in Malaysia is still quite high, and particularly we look at the B40 is where it's disproportionately high. I recall, I don't have the exact number offhand, but I'm sure you know the numbers better than me. Like nearly half of Malaysians don't have insurance, right? So how do we tackle that? Is digitalization the way to go forward? If so, how do we go forward with digitalization to tackle that issue? Or is it a more deeply rooted financial literacy issue, economic issue? What are your thoughts on this, Rohit?
So it's a bit of both, Vincent, in my view. So let me try to explain. I think this is where sometimes, statistics only tells you half truth. So when people say Malaysia has 55% penetration, the fact is, if you divide Malaysia broadly into 4 buckets and you say there's an affluent group, which is roughly 600, 700,000 Malaysians. There's a mass affluent, which is about 6.5 million people. So that's 7.1, 7.2 million people are the ones who insurers have been primarily competing in over the last 100 years. And you look at those segments, you will meet many a customer who has 7 policies. I'm not exaggerating. Yeah, especially if you go by ethnicity, mass affluent Chinese customers have much more insurance policies. So it's a red ocean in a way. So over there, the penetration could be, it's really guesstimation that we've done internally, could be upwards of 80%, if not 90%. So this 55% is not showing you the true picture. And then when you go down to the mass affluent, young families, young professionals, we noticed during our very not scientifically proven, I would say, focus group as well as surveys, 20% of them are covered. So clearly you can see there's a big coverage gap. And the reason is very simple. They find insurance expensive, they find insurance complex, and they find insurance too difficult to buy. So that's why we simplified. We have this tagline, simple, easy, and affordable. So all products should be less than 10 minutes, we should speak the mobile phone language to them, because millennials only, what's the first and the most important thing to a millennial? Is the mobile phone. So you speak the mobile phone language, they will get it. So we speak the mobile phone language, be it for our renewal, be it for our new products, if I may say so. Now, coming back to your question, so I think the way to target these customers is to have that clear distribution segmentation. Our banks provide us access to high net worth customers as well as mass affluent customers. Agents have access to mass affluent, some mass and high net worth, not all of them. So we need digital means, because from a cost management perspective, it just will not make sense to administer mass policies, low value policies over traditional means, because the cost will never justify that expense. Sure. So that's why it's very important to these products to be digital. So in fact, the one we are launching in the middle of May is targeting specifically B40. So there's going to be a B40 plan that we are launching in May. And there are others in the market too. The largest insurer in Malaysia has one with another telco as well. So I think some of them are looking at it. But it comes down to simplicity. If you make the product too simple, the literacy levels are so low that it's going to be even more difficult. If the guy who has 5 and 6 policies saying, I need advice, imagine the guy who has no policy. He's going to find it impossible to buy an insurance policy. So I think that's exactly. So that's why you have to pick out one thing and say, okay, what is the first thing you need to cover? You need to cover your health. What is the second thing you need to cover? If something happens to you, your family has some money. What's the third thing you need to cover? If some, material disease happens to you, a critical illness happens to you, then you go into savings and blah, blah, blah. So we need to go back to breaking it down into small parts and saying, let's go 1, 2, 3, 4. But I'm very clear. I can't sell insurance to someone who is struggling to buy bread. That is for the state to provide. But for someone who is beyond that level, then that's where we come in to say, can we slowly build them up as they get slightly better off, rather than putting a lumpy big product and scaring them off. I'll give you an example. The average premium of my health insurance product through the agency channel was 3,200 ringgit, which is about 300 ringgit a month, 250, 300 ringgit a month. The average premium which we had last year for agency, we also had a proposition which is about between 100 to 125 ringgit. So we try to target a very different customer. And then we have average, which is for our e-medic, which is 50 ringgit. So you're seeing three different kinds of customer. And then there's also the high net worth coverage, which will run to several thousands. So you're seeing a very different segmentation happening in the country. And I think that's where all of us also will have an opportunity to play, because earlier every insurer operated in the same space.
Yeah, I guess let's not fight in the red ocean, right? There
Exactly.
are some very salient points that you've brought up in that conversation. I think one thing that I've observed is that, in the early 2000s, when we talk about mobile, it was a added feature. Like, this is a nice advantage to have. But these days, it's becoming more and more of a hygiene and basic feature to have. It's like, if you don't have it, what are you even doing? Yeah, and I think I'm also excited to kind of find out about your B40 product when you launch, to kind of see what shape or form it takes. But just to also drive the point back to real life examples, because you did launch your e-medic, and I'm curious about, in terms of your e-medic, do you have data of how many of them were first time purchasers of insurers? Because I think that would kind of
70%. Of course, that may not be the latest data, because I don't have that in front of me. But at one point, it was 70% of them were first-time buyers. And I think with the new plan, we will launch. The way we've used e-medic also is very important. We understood the millennial segment. For them, mobile phone is the most important. The next one for them that's important is their health, because if something happens to them, they need to be covered. They are not so much thinking about life as yet. That comes in when they have a family or they get married and so on and so forth. So millennials who are married, young couples, etc. But singles, they are thinking less about life protection, right? So what we did was we also put in a proposition of optional add-ons. It's called the Amazon of insurance kind of option. So basically, when someone is checking out of their purchase, we give them an option to say, do you want to buy life insurance as well? And you know what we saw, and we put a lot of effort. This is where insurers sometimes don't understand. You won't believe we only asked one additional question. We worked with the reinsurer to ensure the questions are aligned. The process is simple. There was a lot of work done in the background between the digital, whiz kids that we have, and also the technical guys. As a result of which, 20% of our e-medic sales today is sold along with a term life policy. No effort for our partners. So our partners like it because they get a bit more fees. Great for the customers, because our customers are getting covered on protection. And you know what? I'm still holding by the digital concept of keeping it simple, fast, and easy.
We call it the Amazon concept or the Amazon push, but really it's the McDonald's would you like fries with that, right?
Right. I think I can tell you an internal comment. Dr. Aslan always says he wants us to be the McDonald's of insurance.
Really?
He used it even yesterday in one of our internal WhatsApp groups. But for me, I want to be the McDonald's of insurance, or the AXA of insurance for digital. But I also want to be the new agency 2.0 for the complex financial solutions. And I think I'm seeing that with my agents and my advisors who really embrace digital, because they understand that's a new way of working. We are millennial across the base. You can see our agents are younger, much younger than a typical agency base. So they're much more digitally aware. Our customer base, last year we had an amazing statistic. 92% of our customers who bought new business from us last year were people who were between 20 to 45 years old. Oh, okay. And 93% of them bought health and protection from us. So in a way, it's lining up nicely to our tagline of being the preferred health and protection insurer for millennials. And employees, 60% of our employees is millennials as well.
Oh, Okay, so all pretty young and energetic folks then. There is a interesting question here from one of our audience, Armir. It says, is it true that legend says that when we buy insurance from agents, the premium is already included in the commission? Will it be cheaper when you buy insurance online where the transaction does not involve an agent?
I love this question. Honestly, I love this question because it's you got to go and look at those digital players who operate in other countries. It's not necessary that the cost will be cheaper, because for digital you will have a massive marketing cost, guys, because you need to keep your brand presence up. You need to keep your TOMA, as we call it, top of mind recall, has to be very high for a digital play. So it doesn't mean the cost is going to change. Yes, when you sell, agents' commission is included in an agent product, of course. Vice versa, marketing costs for digital is included in the digital costs as well. So it's not necessary that one is cheaper than the other. At the end of the day, I do believe agents have to demand a higher value, because there is advice they are giving you. It's not as simple as buying a simple product online. So I do attach a certain greater degree of value to an agent for the advice they give us.
All right, fair point. So I don't think we have much time left. So we'll close off with one question and then your final thoughts.
Sure.
During this whole conversation, we talked a lot about how the pandemic has shifted behaviors in consumers, shifted business models, various things, right? So, I mean, do you foresee that these changes will be sustained, or like after a few months, everyone will just go back to usual? What are your thoughts? Like, do you think it's sustained, or do you think people just revert back to the old normal, as they say?
I think some things will sustain, some things will not. Just like working from home, I remember there was a lot of debate at one point where employees who never wanted to work from home now are saying, not bad.
Not
and
so
then
bad.
people who said they only want to work at home, because we had worked from home for 2.5 years, now saying, oh, actually, you're right. We do want to come back to office. We miss the faces. We miss the brainstorming discussions. We miss the camaraderie. So suddenly people realize everything in life is about moderation. It's, there's no one way to this one. I think the same with digital, with agency. Agents are going to realize that they need digital and they're going to embrace it. But at the same time, they will also realize they need to speak to customers. Same with digital. I think what we realize now is digital works, and the awareness has increased for customers. And people are going to say, hey, you know what? Actually, I can service online, and it's not as tough as I think it is to update my name, or to change my premium details, or to buy a product. So I think it's very much going to be a question of some things remaining, some things not. I just want to be very cautious that I don't want people to rush back too quickly. Even when MCO has lifted, I have told my employees as well as agents, go slow, guys. For example, as employees, we don't expect to be more than 25% strength, even post MCO from 13th. So we will maintain it at 25% for a few weeks. And when we see everything is normal, then we'll dial up to 50, 75, 100. Same with our agents. We are saying, even if MCO is lifted, please meet our clients only if you really need to meet. Otherwise, do it digitally, because you've learned new ways of doing it. So I think we need to tread very carefully, because we all know the risk of wave 2, wave 3, and I don't think any country in the world can afford another lockdown. So it's really something we need to be very careful about.
No, of course, very true. And I guess, on the note of work from home, besides missing the camaraderie and missing the faces, it's also missing not having children screen at home, right? That's a problem a lot of parents to contend with. It's like 2 full-time jobs. Okay, so do you have any closing thoughts you want to share with our audience today, Rohit?
So thanks, Vincent, for the very good discussion, as always. Very good discussion. I've seen quite a few questions, so if there is any unanswered, I think we're quite social media savvy, both of us. So feel free to send it over to me or Vincent, and we're happy to get back to you. I will leave everyone with just one thought, which is a quote that I love the most. I've repeated it too many times for my team. When the going gets tough, the tough gets going. And if we don't get going now, we're never going to get going. So I think this is the time to be bold, be innovative, be disruptive, and take things head on.
Wonderful. And with that, it only leaves me to thank Rohit for joining us today and the rest of you for tuning in. We hope you enjoyed the session, and feel free, like Rohit said, feel free to post any comments over there, and we'll try our best to address it post the event. All right. Thank you, everybody.
Thank
Take
you.
care. Have a
Thanks.
wonderful
Ciao.
day.
Bye. Bye.
Looking for a medical card? Just start tapping. After all, we tap every day. We tap to buy stuff. Tap to communicate. Tap to work. Tap to play. And now with AXA, we can tap to protect ourselves and our loved ones. Introducing eMedic, the first ever online medical card in Malaysia. Yes, that's right. You can now tap for medical protection. Just tap to purchase. Tap for strong hospitalization benefits. Tap for personalized consultation. Tap for rewards. All for a monthly premium that will make you tap your fingers in excitement. Fast, easy, and affordable. Isn't that fantastic? Tappity tap your way to a peace of mind with AXA eMedic now.